Did you know that letting your money sit idle in the bank could be one of the biggest financial mistakes you make? That's right. Robert Kiyosaki, a billionaire and finance expert, warns that if we don't know how to take care of our money, it will simply lose value, and all our hard work could go to waste. Imagine working hard, saving diligently, only to see your money lose its worth. Scary, isn't it? And the worst part is, many people aren't aware of this and think the bank is the safest place. But don't worry, because in this video, I'll show you exactly what Kiyosaki does to protect and grow his wealth. If you truly want to secure your financial future, stay with me, because I'm going to reveal the strategies billionaires use to keep their money from disappearing. The bank interest trap. Imagine you have a money tree, and every month, this tree gives you a coin. Sounds great, right? But what if I told you that while your tree grows slowly, a pest called inflation is eating away at its leaves, weakening it? That's what happens when we leave money sitting in the bank. Banks tell us it grows with interest, but the truth is that this growth is very slow, while the cost of everything around us rises much faster. Let's say you saved $100. After a year, the bank adds a little interest. But at the same time, the prices of toys, snacks, and even simple things have also gone up. So, even with more coins, you end up buying less than before. That's why leaving money idle in the bank might not be the best idea for those who want real growth. Why precious metals are so valuable. Think of a pirate's treasure chest, full of gold coins, silver, and precious gems. Why is this type of treasure so special? It's because metals like gold and silver are rare. Unlike money, which governments can print as much as they want, these metals can't be created or found in large quantities. When something is rare, it becomes more valuable because everyone wants a piece of it. Now, imagine you save your money in gold coins instead of dollar bills. Even if prices go up, gold doesn't lose its value like normal money does. It's as if that treasure is always safe, no matter what happens to the economy. That's why many people prefer to save part of their wealth in precious metals, as they act like a shield against crises and inflation, protecting the value of what you've earned. Gold as a protection for the future. Gold is one of the most valued investments in history, and for a good reason. Unlike money, which governments can print endlessly, gold is a limited resource. In other words, you can't just make more gold, so it remains valuable even when the price of other things rises. This makes it a reliable form of protection for the future. An example of this is that, years ago, a small amount of gold cost much less than it does today. Over time, its value has increased, and experts believe it will continue to rise. This is why some people prefer to keep part of their money in gold since it doesn't lose value like regular money. This investment helps protect what you have against economic changes, ensuring that the value doesn't disappear. Gold ETFs. Investing in gold without keeping the metal at home. Have you ever thought about investing in gold without having to store bars at home? This is possible with something called a gold ETF. An ETF works like a fund that allows you to buy a share of gold, which is stored in safe places, and you can track its value. Essentially, you invest in the price of gold without handling the physical metal. Gold ETFs are interesting because they give you access to gold's value in a more practical and secure way. With them, you can buy and sell your shares of gold quickly, just like stocks on the stock exchange. This is an ideal solution for those who want the security of gold as an investment but don't want the hassle of storing or transporting the metal. It's a modern way to invest in a valuable resource without complications, allowing you to monitor its value anytime. Have you heard about this tip before? Did you know it's possible to invest in gold without keeping it at home? Let us know in the comments if you already invest in gold or if you know someone who does. I'll be here to help in the comments. The Swiss franc, a safe haven in times of crisis. Imagine you're on a boat in the open sea, and a storm starts brewing. You'd feel much safer if you could anchor at a stable island, right? For many people and big investors, that safe island is the Swiss franc, Switzerland's currency. When the world faces economic crises or problems, the Swiss franc is seen as a stable currency where its value remains protected even in turbulent times. During economic crises, many people choose to anchor part of their money in this currency because Switzerland is known for its political stability and strong economy. This makes the Swiss franc a smart choice to protect money. It's as if, instead of leaving your money in a stormy place, you take it to an island where it stays safe until the weather clears and you can use your resources with peace of mind. Government bonds, a safe investment to protect your money. Imagine lending money to a super trustworthy friend who promises to pay you back with a little thank you bonus. When you invest in government bonds, it's similar, but in this case, the friend is the government. By buying a bond, you're essentially lending your money to the government, which will pay it back with some interest. This type of investment is considered one of the safest since governments are committed to repaying to maintain people's trust. Government bonds are ideal for those who want to protect the value of their money securely, especially in uncertain times. Although the return is modest, it's guaranteed, and you can rely on it over the long term. So, investing in government bonds is like making a safe deal with a reliable friend, knowing that your money is well cared for and will yield a little extra in the end. Value stocks, a solid and safe choice. Value stocks are investments in well-established companies with a constant demand for their products, such as those in the energy or metal sector. These companies are generally more stable, offering regular dividends and slower but steady growth over time. Unlike growth stocks, which can have big price swings, value stocks are a more reliable choice for those who prefer to avoid high risks. Investing in value stocks means choosing companies with strong fundamentals, which reduces the risk of losses. This is ideal for people who want to preserve and grow their wealth steadily and with less exposure to risk. Additionally, funds focused on value stocks allow you to invest in several of these companies at once, further diversifying your portfolio and ensuring a solid investment base. Real estate. Protection against inflation. Real estate is considered one of the best ways to protect money against inflation. That's because land, houses, and buildings tend to increase in value over time, especially in areas with high demand, such as big cities. When you invest in real estate, you're putting your money into something that generally holds or increases in value, even as the cost of other things rises. Additionally, real estate can generate passive income if rented out, providing a steady return. This type of investment is highly sought after by people looking for security since properties are solid assets with continuous demand. In the long term, having part of your money in real estate can be an excellent strategy to ensure your wealth's value remains stable, keeping pace with rising prices and protecting against the erosion of inflation. Real estate investment trusts, REITs, investing in real estate with ease. For those who want to invest in real estate but don't have the necessary capital or don't want to deal with property management, real estate investment trusts, or REITs, are an excellent alternative. With REITs, you buy small shares of large real estate developments, like malls or commercial and residential buildings. It's like becoming a partner in these properties and receiving a share of the rental income. These funds offer a practical and accessible way to gain exposure to the real estate market without needing to buy physical property. Additionally, REITs usually distribute earnings regularly, acting as passive income. They're ideal for those who want the benefits of real estate but are looking for more liquidity, as you can buy and sell shares in a market easily, keeping your portfolio flexible and diversified. The rarity of metals, a natural and essential wealth. Imagine you're assembling a new smartphone. It sounds simple, but without certain precious metals, like cobalt, nickel, and copper, it simply won't work. These metals are essential for many high-tech products and, being rare, become more valuable as demand grows. With the rise of technologies like electric cars, the demand for these materials intensifies, driving up their prices. Investing in precious metals, beyond gold and silver, is a way to take advantage of this appreciation. Mining companies that extract these metals have seen steady growth, and owning a share in them or investing in sector-focused funds is like having a modern gold mine. When you invest in these metals, you're betting on technological advancement and ensuring that part of your money is in something increasingly essential and in demand. Safe haven currencies. Financial security in times of crisis. In times of crisis, some currencies are safer for protecting your money. These are safe haven currencies, like the Swiss franc, British pound, and Chinese yuan, which are considered stable and reliable. When there's economic instability or global crises, investors worldwide turn to these currencies to protect the value of their money. The Swiss franc, for example, is highly valued during economic crises because Switzerland has a stable and secure economy. This helps keep your money safe from the fluctuations and losses that can affect weaker currencies like the US dollar at certain times. Even if not everyone can open international accounts, you can invest in currency ETFs, allowing you to benefit from these safe haven currencies and keep part of your wealth secure, even in challenging times on the global market. The dollar and the importance of diversifying currencies. The US dollar is the most widely used currency in the world, but since it stopped being backed by gold in 1971, its value depends entirely on the trust in the US government. This means its value can fluctuate with the economy, inflation, and US politics. That's why experts recommend not relying exclusively on the dollar, especially in times of economic uncertainty. Diversifying investments in other currencies and assets offers greater protection. By not concentrating everything in dollars, you reduce the risk of losing value in times of crisis or instability. Currencies from countries with strong economies, like the Swiss franc or the euro, can offer greater security. Thus, diversifying currencies is a smart strategy to maintain the value of your wealth, protecting it from possible dollar declines and avoiding significant losses. Government bonds, security with guaranteed returns. Government bonds are a safe form of investment in which you lend money to the government in exchange for interest payments. They're considered one of the most reliable investments since governments in strong economies, like the US, are committed to repaying these earnings. In the US, for example, options like T-bills and T-bonds are available with different terms and rates of return. Although bond returns are lower compared to riskier investments, they're recommended for those seeking protection and stability. With bonds, you can preserve the value of your money securely, as they offer a fixed return, helping combat inflation. In times of economic uncertainty, investing in government bonds ensures your wealth continues to grow steadily without the risks of market fluctuations. Value stocks, stable companies for secure growth. Imagine you own a small part of a company that sells essential products like energy or food. Even during tough times, these companies remain strong because everyone needs these products. This is what we call value stocks, investments in well-established companies with good reputations and constant demand. Value stocks are known for offering more stable returns and for paying regular dividends to investors, serving as an extra income. Unlike growth stocks, which can have big price swings, value stocks are secure and predictable. For those who want to invest with less risk and still ensure a stream of income, these stocks are an excellent choice, allowing you to grow your wealth steadily and with fewer worries about market fluctuations. Investing in real estate, protection against inflation and extra income. Investing in real estate is a powerful strategy to protect money. Land, houses, and buildings generally increase in value over time, especially in areas with high demand. This means that besides maintaining your money's value, you can grow your wealth over the years, as the real estate market often keeps pace with or even outpaces inflation. Additionally, real estate can generate extra income if rented out, acting as a source of passive income. This monthly return helps offset the initial investment and can be an excellent way to build a solid financial base. With property appreciation and the possibility of rental income, investing in real estate is a reliable way to ensure your wealth's value grows and remains protected over time. Real estate investment trusts, REITs, practical real estate investment. Real estate investment trusts, or REITs, are a great option for those who want to invest in the real estate sector without needing to buy or manage a property. With a REIT, you buy small shares of large real estate projects, like commercial buildings or shopping centers, and receive a share of the profits generated by these properties, usually as dividends. This type of investment is advantageous because it provides a practical and accessible way to participate in the real estate market. Unlike buying a physical property, which requires a high capital investment and maintenance, REITs allow you to invest with smaller amounts and offer more flexibility, as shares can be bought and sold easily. For those looking for diversification and passive income, REITs represent an efficient way to participate in the real estate market without the complexities of direct property ownership. Industrial metals, investing in essential resources for technology. In addition to gold and silver, other metals, like cobalt, nickel, and copper, are increasingly sought-after investments due to their importance in modern technology. These metals are essential in manufacturing batteries for electric cars, electronics, and even medical equipment. With the growing demand for these technologies, the value of these metals tends to rise, making them a strategic investment. Investing in these metals, either directly or through mining companies, is a way to benefit from this increased demand. Unlike other assets, industrial metals are tangible resources essential to technological progress, providing them with greater stability. As the sustainable tech market grows, industrial metal investments align with this trend, adding a consistently valuable asset to your portfolio with less exposure to typical economic fluctuations. Safe haven currencies, financial protection in times of uncertainty. So-called safe haven currencies are those that maintain value during economic or political crises. Currencies like the Swiss franc, British pound, and Chinese yuan are considered stable because they come from countries with strong, secure economies. During times of uncertainty, many investors prefer to place part of their wealth in these currencies to protect the value of their money. This diversification strategy helps reduce risk since these currencies often gain value when others weaken. Those who invest in safe haven currencies can shield their wealth from sudden currency fluctuations. For those unable to open international accounts, there are alternatives like currency ETFs, which make it easier to access these currencies and allow investors to keep their wealth secure even during global economic turbulence. Diversifying currencies. Don't put all your eggs in one basket. Imagine you're storing eggs in a single basket to keep them safe, but suddenly the basket begins to shake. If all the eggs are in that one basket, the risk of losing everything is high, right? The same thing happens with money when you rely on only one currency, like the US dollar. While the dollar is strong, it can quickly lose value during times of crisis or instability in the US. Diversifying currencies is like spreading the eggs across several baskets. Instead of relying solely on the dollar, many investors split their money into other strong currencies, like the Swiss franc or the euro. This helps reduce the risk of losing value since, if one currency becomes unstable, the others can help balance things out. By distributing wealth across different currencies, you create a more secure base, protecting your money from fluctuations that a single currency wouldn't be able to avoid. Sovereign bonds, security guaranteed by the government. Sovereign bonds are like a loan you make to the government, which repays the amount with interest. Backed by governments from strong economies like the US, these bonds are considered one of the safest investments. They are ideal for people looking to preserve their wealth and receive a steady return, even in times of economic uncertainty. While sovereign bonds yield lower returns compared to other investments, they provide stability and security, becoming a core pillar of protection within a portfolio. In the US, for instance, you can choose from T-bills, T-notes, and T-bonds, each offering different terms and returns to suit various investor profiles. Investing in sovereign bonds is a reliable way to safeguard wealth and ensure a constant income stream with minimal risk. Value stocks. Investing in solid, reliable companies. Value stocks belong to companies that are already established in the market and provide goods and services with constant demand, like energy, food, and metals. This type of stock carries less risk compared to growth stocks, which can be volatile and unpredictable. Value companies tend to be more stable, often paying regular dividends to shareholders, offering an additional source of income. These stocks are ideal for those who want to preserve and grow their wealth securely, without facing large price swings. By including value stocks in a portfolio, investors benefit from a more stable appreciation over time. Additionally, it's possible to invest in funds focused on value stocks, ensuring diversification and safety. These funds consist of multiple stable companies and provide a solid foundation for growing wealth. Real estate, a reliable investment for income and appreciation. Real estate is one of the best ways to protect money, especially during times of inflation. When you purchase a property, like land, a house, or a building, its value tends to rise over time, keeping up with the increasing demand for space. Additionally, real estate can generate passive income through rentals, providing a steady, reliable return. This type of investment acts as a valuable store of wealth that doesn't rely on market volatility. In high-demand areas like major urban centers, property appreciation can be even higher, making the investment more profitable. By combining appreciation and potential rental income, investing in real estate is a trustworthy strategy for safeguarding and expanding wealth long-term, offering both security and financial returns. Real estate investment trusts, REITs, flexible real estate investment. Imagine you want to invest in large real estate projects like shopping centers or office buildings, but without needing to buy an entire property. Real estate investment trusts, known as REITs, make this possible. With REITs, you buy shares and become a partner in major properties, earning a portion of the profits, usually in the form of monthly dividends. This is an accessible and practical way to enter the real estate market, as you don't have to deal with the paperwork and costs of owning a physical property. Additionally, REITs are traded like stocks, making it easy to buy and sell shares whenever needed. Thus, REITs allow you to create a source of passive income with the flexibility of investing with smaller amounts, diversifying your portfolio and participating in real estate without complications. Industrial metals. Investing in essential resources for technology. Industrial metals like cobalt, nickel, and copper are fundamental to modern technology, used in manufacturing batteries for electric cars, cell phones, and computers. As demand for these products grows, the value of these metals is likely to increase, making them an attractive investment with strong growth potential. Investing in these metals or mining companies is a way to benefit from this demand growth. Unlike other assets, industrial metals are tangible resources essential for technological advancement, providing greater stability. As the sustainable tech market expands, investing in industrial metals aligns with this trend, bringing a consistently valuable asset into your portfolio with less exposure to the typical economic fluctuations. The importance of diversifying with luxury items and collectibles. Investing in luxury items and collectibles, like classic cars, art pieces, rare watches, and limited edition items, is a diversification strategy with significant potential for appreciation. These items increase in value over time due to their exclusivity and appeal among collectors, with some offering highly attractive returns. This type of investment serves as a store of value during unstable times since collectibles are not affected by economic swings like traditional assets. Additionally, rare items have a steady demand among buyers willing to pay high prices to acquire unique pieces. For investors seeking diversification and long-term appreciation, luxury assets and collectibles provide an interesting alternative and a valuable complement to their portfolios. Money in the bank. Limited protection against inflation. While keeping money in the bank might seem safe, it generally doesn't keep up with inflation, meaning its real value decreases over time. The interest rates offered by bank accounts are often lower than the inflation rate, reducing the purchasing power of your money. This invisible loss means that idle cash loses value, limiting its ability to retain wealth over the years. To effectively protect your money, it's important to consider investments with returns that exceed inflation. This includes diversifying a portfolio with assets that have growth potential, such as real estate, precious metals, and value stocks. These assets help offset losses caused by inflation, ensuring that your wealth remains more secure and maintains its purchasing power over time. Fractional reserve banking. How bank loans work. In a fractional reserve banking system, banks lend out most of the money you deposit, keeping only a small fraction in reserve. This model allows banks to multiply money, generating profit by charging interest on loans. Essentially, they lend more than they actually have in cash, trusting that not all customers will withdraw their deposits simultaneously. While this system helps drive the economy, it increases banks' liquidity risk since, in times of crisis, they may not have enough money to cover all withdrawals. This model shows that relying solely on bank accounts to store wealth can be risky. Diversifying in assets like real estate, stocks, and precious metals is a way to protect your capital against potential system failures and ensure greater security for your money. The effect of interest rates. How the rich and middle class pay different rates. Imagine you and a billionaire, like Mark Zuckerberg, go to the bank to apply for a loan. Even with the same amount at stake, the bank offers the billionaire a much lower interest rate because he represents less risk of default. On the other hand, someone with a middle income may face a higher interest rate to offset the greater risk of non-payment. This privilege of low interest is an advantage the wealthy have, as they secure loans on better terms and invest the borrowed money in income-generating assets. For those with middle incomes, the cost of interest limits access to growth opportunities. Knowing this highlights the importance of seeking alternatives that yield returns and avoiding high-interest debt. When possible, investing in assets with solid appreciation is a strategy to mitigate the impact of this unequal system. Smart debt. How the wealthy use loans to their advantage. The wealthy see debt as a tool for growth. Rather than avoiding it, they take out low-interest loans and invest the funds in assets that yield more than the loans cost. For example, if they secure a loan at a 1% rate, they can invest in stocks or real estate that earn 5%, generating profit from the bank's money. This strategy, called leverage, allows them to increase their wealth without using only their own resources. By investing debt in safe, profitable investments, debt becomes an ally, helping multiply capital in a calculated and strategic way. Credit cards. Convenience with caution. Credit cards can be helpful but also carry some of the highest interest costs, reaching rates of up to 20% or more per year. If the balance isn't paid in full, debt can quickly grow and become difficult to pay off. Additionally, credit cards create a liquidity illusion. You spend now but only pay later, which leads many to overspend without realizing it. To avoid these risks, it's crucial to use credit cards responsibly, always paying the full balance at the end of the month. A credit card should be a tool for convenience, not an income extension. Keeping expenses in check and avoiding excessive installments are essential steps to sidestep the trap of high interest and debt accumulation. Now you know how to protect and grow your money truly. You can't just let money sit idle, thinking it will increase in value on its own, because it will lose strength over time. The key is to take good care of it and invest in things that make it grow, just like billionaires do. Always stay alert and use these tips to keep your money from losing value. This way, you ensure all your effort will pay off, and your financial future will be safe and well protected. Thank you for watching this video all the way through. Don't forget to like and subscribe to the channel to keep receiving our next content. See you in the next video.